I'm Antonia Eklund in Rio de Janeiro, here with Amit Ramnani, founder of Ipanema Wealth, a boutique consultancy. And today we're discussing Brazil as an investment destination. Amit, Brazil is underperforming against the other BRIC countries. Why do you remain optimistic?
Well, I believe crisis equals opportunity. We've seen in the past, during 2008 and crisis before that there's always opportunity in certain periods like that. And yes, I can understand investors' concerns regarding the current period of stagnation. But as I said, there's opportunity. Let's look at Brazil compared to BRICS. There are very, very different dynamics between all of them. Brazil's got a very different history, very different economic and political circumstances. The emerging middle class here consists of 90 million people. It's 90 million with a higher propensity to consume, right, out of a population of 200 million. Also, Brazil has a far more diversified industrial base than its Latin American peers, and in terms of natural resources, it's almost self-sufficient with respect to oil, with respect to iron ore, and agricultural produce. With respect to actually bringing money into Brazil, the capital markets infrastructure here is very advanced. We've got a very well-developed regulatory environment. So as I said, yes, it is a challenging period, but we're very optimistic on a medium to long-term basis.
The main stock index, Ibovespa, has grown by just 13% since the beginning of 2009. That's not that impressive if you consider 6 to 8% inflation per year.
Not at all.
So what is your opinion on Brazilian equity as an asset class?
Well, Antonia, if we look at just the large cap space, just Ibovespa, that's been very sensitive to commodity price fluctuations, which have affected companies like Vale and Petrobras, and also the larger companies, including the major banks, have been sensitive to the macroeconomic picture of Brazil. I believe a more dynamic investment strategy will incorporate medium and small companies in the index. Remember, the index has about 500 companies in it, and there are plenty of opportunities there. The medium-sized index, the medium companies, that index grew by 60% over the post-crisis period. And if we look at small caps, it's grown by 100%, it's doubled. So there's definitely opportunity. And those two, the medium and smalls, are more linked to the internal consumer economy.
Sure, but what about the higher risks of the small to mid caps?
Indeed, Antonia, no pain, no gain. I mean, short-term volatility is something which investors need to accept if they want a higher return. The key is working with experienced fund managers and making sure that you have the investment horizon to achieve that return.
What other asset classes are interesting in Brazil?
Well, if you're looking at short-term capital protection, then I would recommend certain fixed income funds and certain inflation-protected products. Also, many banks offer guaranteed notes, which are secured against their mortgage book. And everything I've mentioned here protects capital and pays a higher return than the Selic, the Brazilian interest rate known as Selic. And for more adventurous investors who have lower liquidity requirements in the short term, then I would strongly recommend private equity. Private equity in sectors such as clean technology, education, and consumer discretionary products. We also have infrastructure funds, which are becoming increasingly popular.